The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. My pleasure to be here. While Larry's away, I try to fill in as much as I can. And let's see. Let's just go straight to the market. The Dow's down 73. This is going to be a really important session. Dow's down almost 11. S&P's down almost 11 at 1743. Comp index is down 32. This is October the 20. What did I say it was? 23rd. And couple of things I wanted to do. I wanted to follow up with a call. I usually do the previous show, which is the Tiger Technicians Hour, 11 o'clock till noon, Monday through Friday on market days. And still the same number, 877-927-6648. And a couple of things were going on during my show. And I had a question from Rich, who had options on SLV. That's the iShares, the Silver Trust. That's the that trades parallel to the silver price, the spot silver. Most importantly is that the takeoff that we just saw, while it was very strong, it wasn't outstanding. It did go from 20.50 in the silver. I'm looking at the continuous contract here, 20.49, right to the high of yesterday, 22.63, and then today we made a fractional new high, 22.82, and it's got a doji candle right now. And the question was, he had put options for November, and my immediate thing was to say, in my mind, just get rid of them. It didn't work. Options, you want to keep your capital. You can lose 35%, 50%, 55%, 75%, 80, 90% in options. Just it can just happen. It happens. And then what occurs in a situation like that is that once you have the option sitting there losing your money, you're just kind of stuck. You just, oh man, it interferes with everything else you're doing. I mean, that's if it's a bigger part of your portfolio than just something that you've done. I'll never say for fun, because fun would imply kind of a haphazard thing that you're just, you could win, you could lose, you don't really care. I mean the fun side of trading, where you are taking a limited amount of money and you're trying to expand that usually as quickly as you can. You don't really care, but quick is what you want. And so I said to him, I'm going to go through this because that's the thinking right there. Now, most importantly about this is that we're in leg B in the Chapman Wave methodology. What is the Chapman Wave methodology? Identify the lowest low. Let's just look at the SLV. We'll use that as an example. The lowest low, in this case, we go back to the left side. I always have to go to the left side to find the lowest low. If you go to 1775 on the 27th of June, there was a signal that started in the on-balance volume, in the stochastic, and in the price movement itself, with a strong candle the following day on the 28th of June. Well, that started a buy mode that went, and in the Chapman Wave, what you look for are 4 successively higher peaks. It's as simple as that. Those 4 successively higher peaks get labeled with uppercase letters on the way up, lowercase on the way down, and on the upside, you expect 4 consecutive higher peaks, and that would take you to D. That's where you've got to be careful. Lo and behold, at 1989, not the year, but the price, on the 22nd of July, it goes right to a leg D, and the next day it forms a peak D with a lower high bar, and it pulls back. But the MACD is still holding really well. Stochastic pulls back sharply, the price pulls back some, and then starts in its way up. It looks like it started a continuous movement or a new buy mode, but instead it goes to an E and then an F. 6 higher peaks. Peak F is where you've got to be real careful. Fails just under the 200 period moving average, and then it pulls back. And now what you can see, let me just draw this here so that you can see, it's not exactly what I like to see in a cup formation, but there was some kind of a cup formation, first of all. But now there's definitely the signs, and this is what I'm anticipating in UNG, which I'll talk about in a moment as well. I had a call about UNG as well. And that says that there's a good chance that the SLV, iShares Silver Trust, is in fact on its way to go to a leg D. So now I'm going to put this in right here with an up arrow because it's already made peak C, and the stochastic is at 79%. It really needs 80% for me to be comfortable, but the MACD is rallying. Not great, but it's rallying. That says to me there could be a leg D, or if there's a higher bar today, 22 round number high of yesterday, that means you could go a little bit higher to start at 22.01 if it's today. That extends leg C. That's actually very bullish because now you still have to make a peak C and then a leg D. And that could even continue as you saw before. Now, what's the downside? The downside is if there is a turn to the downside and it takes out 21.29, which would take the stochastic probably to about 73%. If it holds under that, the stochastic could go lower, and then the MACD starts to fade. That's his best case scenario. Now, Rich couldn't hold on. I hope you're going to be able to listen to this as an archive because this is my opinion, but you've got to take this seriously. Capital preservation, I'll say it again. In any form of financial activity, capital preservation is imperative. If you don't have that, you've lost the ability to do the kind of trading that you would like. You've lost the ability also to put on position plays of consequence because you're going to have to make lots and lots of really outstanding trades with much less money, maybe lower priced stocks. If you go back to the options, something I need to talk about. The desperation that people felt in 2000 after the massive turn down in the Dow, and then in March, the massive turn down in the S&P and the Qs, the NASDAQ NDX 100. I was willing to bet that there were a lot of people that went from trading the stocks unsuccessfully because they were still in buy mode and those things were really in sell mode. They went to options as their money dwindled, and then they just failed miserably. I've met so many people over the years who will never forget how much they lost. They cannot forget how much they lost in that smash to the downside. It was really a crash. It was a proper crash, a long-term crash in the Qs. They went down over 80%. So I'm looking at this and I'm saying, Rich, I don't know what the scenario is for your, but the fact that you called me said that you were worried. The fact that you were down 50% tells me not to play games. Capital preservation, I'm going to say it one more time, capital preservation. My thinking is I would automatically do this. I would be out the trade. Done. Finished. And you can always look, now you've got 50% of that working capital that you can work with. So that's my recommendation. So all of a sudden, by the end of the day, silver is down, and tomorrow it gaps down, and you're out the trade. What can I say? You've got your capital. What if it's the other way around? If by the end of the day, the SLV is trading at 22.10, I bet that 50% will be more like losing 67 to 70%. I don't want to see that. I don't want you to see that. So please, and if you, now what I normally would say is if you were in stocks, take half off immediately, leave the other half on, put a stop under the other. Options, you can't really do that because by the time you figured everything out, the remaining half could be down another 50%. So please, just be really careful. 2/3 off, whatever it is, capital preservation, I said it again. That's all I'm thinking of. Now, your big question was, could silver at some point have a pretty deep correction? Yeah, it absolutely could if it starts to fail by Friday or Monday and starts to, but the silver stocks and gold stocks are acting really well. So my suspicion, there's a little bit of substance here, that there's an arch formation underway, and the target I would have, I had it on the other, let me go back to the other, in the at SI, I think I did it on the continuous, yes, the continuous silver contract is trading at 22.65, and that has a price, it's just too soon, but it is looking like I would, by the when? By the 28th? Today's the 23rd. yeah, maybe by the 28th it gets into the 23s, so 23.50 area, so 22.66. I don't know, but this is kind of what it's looking like. No, I'm going to be more conservative. I'm going to say by the 1st of November, silver could be, in fact, trading in the 23.50 to 23.75 area, just to be a little bit more cautious. But on the downside, you'd have to see it fail. It'd have to close underneath 22, and then all of a sudden you'd be in the money. It's real tough for me to tell you what to do, but you asked my opinion. My opinion is handle that trade. Don't take further loss, or at least give yourself, let's just say, I'm going to just guess a number. Let's just say they're now trading at $1.35. You bought them at $3, they're trading at $1.35. I would say at $1, I'm out, no matter what happens. Okay, so I hope that goes through with what I'm thinking in terms of the silver, because it does look from the weekly chart that it's moving up. And if I want to continue just real quickly, see the UNG chart has a chance to look like that. Look, see the same? The weekly chart of the UNG. You know what? I'm pleased I gave that recommendation. Start a little nibble. If there's a decline tomorrow morning, it is how it handles it about an hour and a half to 2 hours later. But look, this is the same as the silver chart in the weekly, not the daily. So there's that rising trend line. Arch formation could be negated if there's a pop to the upside. Let's go to Brent in Martinez, California. Hi, Brent. How are you?
I'm doing very well, thank you, Basil.
Good.
Wanted to let you know I got out of my Caterpillar calls yesterday and did very well with them, and yeah.
You know, that extra bump to the upside was absolutely what you wanted, because to close at the high of the day, folks, Caterpillar closed yesterday at 89.17 was the high, closed just about at the high in leg F/B. Now, this is where the alternate wave count comes in, and instead of gapping to the upside today with great news, that whole thing with the miners and the tractors and the this and the that, it plummets down, and you can look at this chart and you'll see this little pattern, looks like a ladybug there. That's the price. It was up there yesterday at 89.17. This morning's low is 83.55, and Brent got a fantastic trade with. I'm so pleased you didn't hold them to find out whether or not the earnings were good, because you had a very nice gain. Congratulations.
There's no reason to take the risk, and it gave me everything I wanted. The trade worked out really. I mean, it's maybe a little bit of luck, but it worked out exactly the way I'd hoped. There's a premium in the calls because of the move up, and I just
absolutely. So you see this.
Have to take the gain.
Let me just tell Rich. What Brent is talking about is that as it's rising, so you're getting premium, because people are wanting to pay more, they're wanting to pay more. But in your case, they want to pay less, they want to pay less. That's how the option premiums work. Great show on Tuesdays at 1 o'clock, at 12 o'clock on options. We'll be back with Brent straight off this. You want to look at Cree? I'll show Cree in a moment. We'll be back with Brent and Gar from Newport Beach.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, The Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, The Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and it's Dow's taking a bit of a hit there, down 84. S&P's down 11. Boeing, I think, is up 4.5 or something like that. Where is it? I haven't got it. Oh, it was right. Yeah, it's disappeared. Yeah, it was up a lot, and it's ameliorating some of the selling in the Dow. So the S&P is really showing it much more accurately, down 0.65. So we've got. So Brent, what are you doing with Cree?
Basil, what I did yesterday, which is a little against my discipline, I generally just wait for the numbers to come out on earnings, and then I'll see what it's doing, and that's where I'll take my position. I went ahead and yesterday I bought $65 puts, the November 65 puts on Cree.
Yep.
And obviously doing very well today. I just... and I would normally just sell them, and I'm probably going to sell them.
So can I just interrupt you? So yesterday, while Cree was before any earnings were reported, you took the opportunity at the high of around in the 75 area. The high was 75.98. That's when you put on your puts?
Yes.
Okay. So let's do this. Now there's a little difference between what we were looking at before. I'm going to recommend two things. One is, so your plan was that if it went down, you would exit at what point?
A little bit of it was based on what it had done prior. They had similar situation the last earnings, and it went down into the 50s.
It did exactly that. So let's just talk about this. This is on the 13th of August. they close a round number 76 high. They plummet all the way to the 200-period exponential moving average the next day. The next day it plummets, it goes down, gaps down to the 58 level, and then it goes all the way down to the 5380, 5382 area of the 200-period moving average, starts a brand new peak A, B, C, D, and then it does another A, alternate count E, B, F, C, and it goes to a D/G right there. I was waiting for one more day because I didn't know if it had made the peak. I actually forgot about the earnings. I think Dave White was talking about it. I believe he was even, I'm not sure, I think he was short Cray, which is a fantastic call. So you have got the absolute meat out of this thing on the downside. Now, I just wanted to talk about this a little quickly because the low today was 59.02. It's trading now at 62. Not a big deal for you, up 3 points, because you've seen a fantastic decline and a very big increase in your put position. Are you intending to keep this as a position because you're anticipating whatever the bounce is, it's going to go lower, and then you're going to consider, or what's the plan?
To be honest with you, I'm just watching it today, and there's a real good likelihood that I'm going to just sell them today, because when it makes a big move my direction, I usually just take the profits.
Okay, because I'm this particular move could be a lot more serious than the previous one, and there are a couple of reasons why. In the move, in the U-shaped pattern that went to the nominal high, this is almost like I was talking about a little earlier on, if you heard it, about the rogue wave. This almost looks like a rogue wave. They went slightly above the 76 round. No, it didn't. It stopped at 75.98, 2 cents below. It went right to that level, and then it tanks. It seems to me from the monthly chart that there is a chance for it to try to rally, give people who never had a chance to short it another chance, and usually they try to rally it to do that. But at the same time, I think looking out, it should go lower. But I'm going to also suggest that your original thought was really much better. You creamed this. You got everything that you could get out of it. Over another point or so on the downside, which would increase your profit from where it is now, what if there's a retracement like Netflix is having? Let me just jump to Netflix for NFLX. Because Netflix is looking like it's trying to make a low that was the 317 round number low, that gap that just reversed yesterday from the 389.16 high, and now I've got a pattern that I'm looking at. I thought I'd drawn it in. I guess I hadn't. Which says that it should make an arch formation, and there may be a second arch formation, and it could take all of 7 to 11 trading, or even 14 to 16 trading days before it actually tries to come back to take out 317, if it's going to do that. In your particular case with Cree, I'd be inclined just to get out. I'd get out and I'd say, hey, if it gets to 64.90 to 65.35, I might just do the same thing again. That's kind of the way I would do it.
Okay, thank you very much.
There's one other thing. You might take half off and keep half. I'm inclined to take the profits. You can always come back again. It's a fantastic trade. Hey, congratulations, Brent.
Thank you.
Thank you for calling. I appreciate that. We'll come back with Garo and Newport Beach straight after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman sitting in for Larry Pesavento. Trade what you see. That's usually the show. My show in the at the 11 o'clock time period is the Tiger Technicians Hour. My service is called the Opening Call. That opening call, in fact, is a very comprehensive look at the markets, and I give parameters what we're looking at every single day, how we use the churn, how we use the VIX, and how we use all these different technical the methodologies that I've developed. I'm also giving a Master Trader Series Friday, November the 8th at 9 a.m. to 4:30 p.m. Go to the front page of TFNN. As the days go by, we'll talk about it, what we're going to do. But you get 1 month of my newsletter service, the opening call for free. It's $128 value. You get a copy of my CD book introducing the Chapman Wave methodology at $249 value, and 30-day access to the course archive available online at TFNN.com. And I am looking at this and I'm saying, wow, this is the price of one little tiny mistake in the market, and you get yourself an entire 7.5 hours of a course that goes through all the fundamentals of the Chapman Wave methodology. And we're going to go to Garrow in Newport Beach. Hi, Garrow, how are you?
Good, thank you, sir. How about you?
Very well, thank you.
Again, back to Visa.
Yes.
Yesterday on a daily chart, it gave me a shooting star.
Right.
So yeah, I shorted at the close, which was 199.98. I shorted there, and today it dropped down. Do you think this is a long-term slide or is a short-term slide?
as I'm looking at Visa, folks, we're looking at Visa. Visa symbol is trading at 198.30, down $1.68. You made a high of 202.68 yesterday. The previous high was 200.86 at peak C. Remember the Chapman wave methodology? What we look for are those Ds. At a peak D, other things can happen. Now, I'm looking at this. I have spent I don't know how much time I've spent on this Visa chart. The way I'm looking at it now, I'm pretty comfortable saying that the 196 round number high made back in July, what was that? The week of July the 26th, where it hit 196 and pulled back to 170.99 for Visa. That was the biggest, that Roman candle that it filled, almost tested the low. It went to 184 round number close on the week of the 23rd of August, but it actually went all the way down to 172.21. It fulfilled everything it needed to do with that Roman candle. This is a technique that I developed. It's the candle of the 2nd of August in the weekly chart. I could give it other wave counts. I'm very comfortable calling this peak F all the way down, starts a brand new buy signal, and at 77% in the stochastic, but the MACD is doing okay. I really have to believe that this is a leg C to the upside in the weekly chart. If I do believe that, I have no choice but to draw in a trend line, a new trend line right there. And it says that until Visa, doesn't matter when, can break that trend line decisively, it's this week it's a 203, the high, it's a 203. Next week, it would be just a little bit higher at about 203.50. Now, if it's able to do that either this week or next week, that to me says it fits in so well with what I'm looking at in many of the charts that say you can count it any way you want, but I'm at a leg C. I need a peak C, and then I need a leg D up, and that takes me into November. And the way I'm looking at this market, the rotational aspect says, regardless of all the downside possibilities, there is a chance that just enough stocks, we're getting fewer and fewer stocks that are really holding up each sector. And it seems to me there are just enough stocks that are able to hold up the, in this case, the sector of Visa, MasterCard, and the credit card companies and that category financial, that I'm thinking Visa looking out is looking the monthly chart hasn't given me a real signal yet other than to say the stochastics turned down, price has gone up, and here again, I don't really have another way of counting it unless I counted a phantom peak at 132.35 and 132.58 in July of 2012 and August. If I call that A, B, C, D, then I'm finally getting to a D here. I might have to do that, but I just don't like to make things fuzzy if they're not fuzzy at all. So I like Visa as it stands. I like Visa in the longer term. It still looks like it's very positive. The weekly chart looks as if it's just a consolidation after a fabulous move of higher highs and higher lows. You remember in a bull phase, you want higher highs, higher lows. That's what I'm looking at. And now we're getting to the daily chart. And the daily chart says that was a G in the weekly chart. It was a little unusual the way it went so high in the 120-minute chart without a single peak until it made that peak F. But this absolutely looks like a G, and it looks to me like you're going to, on the shorter term, have a good, I know you're like 2 to 3 points or so, and then you start to consider getting out. I think you're going to get out of this with, if it takes out 196.70, okay, here, this is the scenario. The Dow is down 84, the S&P is down 11, and the Qs right now are down 72. So there's 0.87, 0.63, 0.54. Ironically, now the Dow is one of the better ones. My thinking here is that this could be a 1 to a 3-day consolidation. If it's a consolidation and not having made a top of consequence. And I must tell you, Gara, the way Visa acted just the other day, the way Netflix acted, the way a number of these stocks are acting, everything about the last 3 to 4 sessions in my gut is telling me that we've made some kind of an internal, I can go back to talking about this, I haven't spoken about it for ages, some kind of an internal low, a high, that's what I'm saying.
Right.
And that the residual high could come in a couple of weeks. That's what I'm looking at, because you've still got the housing sector, which with the housing sector with the metals like gold and silver are acting very well here, and others are starting to falter some. So here we go. I'm going to recommend that you put a buy stop under yesterday's low of 199.51. And if it takes out 196.60 in the next anytime between this afternoon and tomorrow, that's going to be your cue to say, okay, you can either take your profits because that's your aim, but 195.10 will be really important support in Visa. 195.30 to 195, let's put it that way. That's going to be very critical. So I think you're in the right position, at least for the short term. Now, this is one of those cases where if Visa, which is only down at just 0.86, almost the same as the Qs in percentage terms, if Visa closes at its low and gaps down tomorrow, I would take part of my position and I would lower the buy stop, and I would just keep lowering it all the way through the day if tomorrow's a very ugly day. I don't think I would rush to get out. I'd let it take you out. In other words, I'd use a trading stop. But if you've got your 3 to 4 points and you're out, stick with your plan. I don't want to change your plan. I'm just saying that if it does fail sharply, right here at peak D is where the moment it should accelerate to the downside.
I see.
And if you use a stop of yesterday's low, it's going to tell you, I've got inner strength. You got to look at me as a buy, not a short. Fantastic that you shorted it, but it was in leg D, and you got exactly the turn down, so you've done the right thing. Just quickly, I want to do the 120-minute chart. The 120-minute chart says the candle of, 196.95, the candle of the low at 11:30 yesterday, that would be the next point of, really important point of support. If it fails there, go straight to the 195s. So I think you got a great entry for the short position. I would just manage the buy stop. Now, it did go from your entry of 199 down to 190. What was the low today? 197. So you just missed your exit point for the points that you needed, right?
I just put him to cover at 197, and I was away for 18 cents. And it started to shoot up from there. Yeah, once I shorted yesterday, I put it just to cover at 197 even, and it hit 197.18, and it went up so fast that it was too late for me to cover. And I don't know, should I get out now or should I wait for tomorrow? That is a little bit mind-boggling to me.
Well, let me put it this way. If it closes at the high but it hasn't stopped you out, and the Dow suddenly comes back and is only down 35 points at the end of the day instead of being down 120, I probably would say to you, in your case, cover it. You don't want to be vulnerable to a gap up. You've had a great, you got the great entry point, so don't be vulnerable if it closes towards the high but hasn't stopped you out. I just take my profits and wait.
Yes, absolutely. I wait until it goes and it rolls around and it starts to go up. Then I start to buy again. Yeah.
That's okay. That's a good theory. And the stochastics at 91%. The MACD is good. I have to tell you, it didn't even touch the 9-period moving average of 196.69. That's why I'm saying, let's see how it acts, because you might want to jump right in to the long side very soon. So, hey, congratulations. You got a really nice entrance for that. Just now you got to manage the trade.
Thank you, sir. Thanks so much. I appreciate
Thank you for calling, Gary. That's Gary in Newport Beach. And so let's do a couple of things here, folks. I wrote it down here. What did I want to do? I always write down, then I forget to look at it. Yeah, look at Panera. We were on air when I was talking about Panera. We used to use this as a nice shorting opportunity. Every time we did it, we only got either a couple of points or got taken out for a tiny, tiny loss. But in fact, that has been the way to go. And Panera Bread is trading at PNRA, is trading at 154.46, down almost 8 points. And look at that. It's made a G/C top. Now, that's the only thing. If I just wish, in this case, that it was a D or something like that. It would have made it so much easier. The G/C says, yeah, there's just a chance that it could go a little higher. That's the one time you've got to be careful. But the stochastic, the close underneath it, the technicals, everything was very weak. And that made the weekly chart the one to watch. And it's made the left side, right side price time match. Wow, look at that. And it's also made the arch formation. It's like what I call the Eiffel Tower, straight up, straight down, looks like a capital A. And it's just about, this is a really key moment, because 153.65 was the low of the week of the 22nd of February of this year. Went all the way to 194.77. It's come down to leg E, and it's trading at 154.30, having just taken out the today, took out that left side low. This is a very important moment for Panera, because if Panera fails to get at 154, if it fails to bounce to 158, 159 in the next 2-3 sessions, but instead takes out 152, it's going to be going down, excuse me, even deeper. So that's Panera I want to look at. And one other, I'm just going to grab a sip of tea here. A very, very cold tea. I'm going to talk about a stock that we were going to try to short today, but we didn't. And we probably won't get it, so I'm going to talk about it. CLB. Core Labs, Core Laboratories, Core and Fluid Analysis, Oil Service Industry. Reason why I wanted to bring it up right now is the weekly also made a C. There's no other way I can count. There is another way. It could be A, B, C, D, E. Is that correct? Or A, B, C, D. But I didn't want to use that because everything about it said it was really correct to call that an F at that particular point in the monthly chart. I just want to talk about this in terms of leg E. That same kind of spiral you saw in Netflix yesterday, and the turn down. And one of the things I was looking at is that in Core Labs, it spiked in this very unusual pattern where it walks the 9 EMA, holds it nicely, earnings come out, it's got a peak E, everything looks like it's going down. Instead, what does it do? It spikes, it makes this very long-legged wick with a body, not quite a doji, but close. Opens at 187.85 and closes at 189.85, 189, yeah, 85. So it's close. The rule of thumb that I have with this kind of pattern is that you can go up and you can go down, but the body of that candle, one way or the other, is going to be touched. And it's the reflex action after that counts. And look what's happened. It makes a round number 200 3 days ago, at peak F, that was confirmed yesterday. And it gaps down today, and it goes under the 9 EMA, and is trying to rally here at 186.78. But this to me looks like it's coming back down to the 180 to the 172 area over a period of weeks. I'll be back. Basil Chapman sitting in for Larry Pesavento. We'll be back with Mike in Sarasota.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. In just a brief moment, I just want to show the 10-minute E-minis had made a peak D and pulled back very sharply from about the 1743 level to the 1734 area, and has bounced, hit the 200-period moving average. This is going to be key. I had a question during the break about do I see the E-minis going down further, and I said I believe they should, but there's a real tussle going on. You need the VIX to rally a little bit more, and at 310 you want to see the E-minis underneath 1736. That'll say good chance to close at the lows of the day. But if they hold anywhere in the 1740s, then you can anticipate that at 1740 they can hold steady around that area or even rally a bit into the close. This is a tough call on the intraday because there are a lot of conflicting things. Let's go to Mike in Sarasota. Hi, Mike. How are you doing?
Great. How are you?
Good, thank you.
Yeah, I just want to consider a very short-term 1-week option spread, buying the GLD 129.50s and selling the 131s to be 1.5-point spread. So I wanted to see where you thought what the count was on the 2-hour the 120-minute chart and maybe even a little bit shorter to give me a clue
okay.
on a good entry point.
Let's do that before we run out of time. Folks, we're looking at the GLD in the 120-minute chart. I've got it in a leg E. At this point, I suppose I could call it an E/B. I'm going to do that just to be absolutely clear that the technicals are holding, but if they stop holding, it will automatically become an E. No, I'm going to go to an E because the technicals are starting to fail. It's under the 200-period moving average. Now, what I would recommend is this. Because you're dealing with a 120-minute chart, which can give you fabulous swing trades that last between the 3 days and 5 days, where we're at the upper end of the range, you really need to get a new confirmed buy signal in the GLD, which means it should hold between 120. The GLD is the Spider Gold Trust. It's trading at 128.83. I suggest that if you do it, the price, the optimal place to look for it, because you want higher prices. You want to see, well, first of all, it's in leg C with the chance that it's going to make a peak C today if there's no new high above yesterday's high of 129.81. If it makes peak D, that's where a number of things can happen. It could have a pullback towards the 126.98 level. It could, in fact, continue, could recycle, because I do have a target of that doji candle on the upside, the candle of the 19th of 132.78 with a high on 131.22 as a low. So that area and a gap down of 130.91. So that whole 131-ish area would be my upside target on a shorter-term basis. That's kind of what you'd be looking for, correct?
Yes.
Okay. So my suggestion is this. You could be a half a point, possibly even a whole point early on the GLD, or it could go to D, which is just fractionally above 129.81. It could go to 129.82, make a D, and then pull back. So that's what the technicals right now at 82% on the stochastic and the MACD expanding give me the potential for what I call a squash pattern. If that's the case, this should go towards the 131, 132 area over the coming 5 days, 7 days or something like that, maybe even sooner, but that's what I'd be looking at. So I'm going to suggest, even though there could be a bit of a pullback now, I don't know if you can actually start and then add to the position, but I would think of starting it at 128.81 to 128. Oh, if it gives back some of the gap from this morning, 128.22. Somewhere in this area between 128.81, I'd prefer if it was a little bit lower, 128.60, but that's where I would set it up. I'd set it up now, and then I would add to it if it holds really steady at 127.20. But this is, I would just start the position now. Hope that helps you, Mike.
Thank you. Oh,
thank you very much. Folks, I'll be back tomorrow, and thanks for being here. And don't forget, we've got a Master Trader course coming up.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.